friends, welcome back for Bitcoin Technical Analysis with me, your good friend, Rocky Outcrop. I hope you're all doing really, really well out there. Thank you so much for joining me again for another technical analysis session. Two things will be in this video, technical analysis and evergreen content, which I think is useful for people no matter what stage you are in your trading career, whether you're a complete noob or a seasoned pro, this sort of chat that we'll have in the middle is for you. So it's great. I think that is great. Good little combination. So how am I going to structure today's episode then, given that we've got technical analysis and a bit of chit chat to have? Well, I'm going to just read through the notes for the technical analysis, and then we'll come back after the chitty chat section to talk about, the nitty gritty of things. But of course, we can look at these things just now in terms of simple language and then tackle that in a more complicated fashion after we get through the chit chat thing, and it all ties together and it's good. So great, let's get on with the show. First things first, June the 15th is the date today, but of course the date is a date is just a date. What's in a date anyway? You can watch this episode today, tomorrow, the next day. Should all be fairly relevant for today, just as the previous episodes have been for the price action that we've just gone through. So wow, that's brilliant. Another reason to subscribe. Yada yada. Great. Whatever. But also the evergreen content in here, no matter what time you're watching it, you'll be able to benefit from that, I believe. And, great. Anyway, so let's just fly through the notes real quick. Up behind me, I have the 24-hour Coinbase chart. And as you can see on the price action, well, you may or may not be able to see it actually. Let's zoom in a wee bit. You can see that we've had some activity over the last day. So what have we got here? Now, the simplistic language I'll use here, of course, is just, just for the lols. I'm not being condescending or incredibly thick. Neither of those, I assure you. Okay, prices dropped to our purple supporty line. Now, what supporty line am I talking about? I'm talking about this one, horizontal it goes. That means lefty to righty. And where did we come in at here as well with the price action? Well, that was right into our goldy pockety area, which is right in here in this where you have the 618 Fibonacci retracement, the 236, and of course the 0.65 area just in here where the wick went down to. Oh, shock horror. That's so strange. The prices normally never turn around at these areas. Lols, of course they do. This is a predictable area for prices to turn around at, and I use that word predictable very loosely, of course. Now, as you know, if you subscribe to the channel, so, like and subscribe, all that jazz. FOMO free, technical analysis, you do. Anyway, is that a breakout from the wedge? Oh, I missed one. Came back up to the 50 simple, so it did. It came right back up to the 50 simple. And what did it do then? Well, it actually came back into this wedge, throwing up the question, is that a breakout from the wedge that we've had just here? Is that what's ongoing kind of currently, or is it not? Was it all just fake out and whatnot? Could we look to the line then? This line here, we could look to the line, this purple, the nicer purple colored line, the more vibrant one anyway, let's say. That forms the lower rising part of the rising wedge formation on the background. We can look at that and in its current position and watch for retests, the current position there. Of course, these things are subjective, so you could be like looking towards this and saying, hey, wikis, what do you have and whatever, and try and make it so it didn't really have a breakout type thing on the go here, but we'll not do that. Let's leave it where it was. Now, incidentally, I wrote all these notes out, all of them, before actually looking at the price action really in any detail. And especially these ones down below, which I wrote before this price action even happened. I wrote this last night. And the thing about this is that when I wrote this, the prices were just up here kind of retesting this area. So that's why that word retest is in there. But of course, it's got a bracket and S afterwards, because we'll be retesting it to the downside, upside, all the sides you like in your subjective world that you live in. So of course, we have all of that on the go. And I was kind of wondering at the point, as well, would there be a lower low? And that's still obviously the question. But I just wanted to kind of, for full disclosure, I don't know why, wanted to point out that I'd written these notes whenever the price was actually just in here, just before it broke back into that area, whatever. If I look over to the sort of the 30-minute chart, then you can see I'm talking like I wrote these notes when it was over here, now it's up here, so yada yada. and we can look at all that in more detail later. Now, of course, feel free to skip through to the end if you're only interested in technical analysis, but I would say don't do that because that's kind of hubris, and that's what's led up to the inspiring why I'm talking about this at all. And it all boils down to gaps and talking about gaps and sort of experts, so-called experts and stuff like that in the world. And I think it's useful for everybody. Now, there's other things I've spoken about lots of times in the past, such as imposter fraud and other things that people who are at the very top of their game in the world, the most, successful people in the world can be stricken by just like anybody else, which is useful for newbies and seasoned pros to know that bit of information. Just a little bit of reassurance for you. Things as well I've talked about, like this Dunner-Kroning effect, and the chart for, the sort of the confidence versus knowledge thing. Also, like, how the drawing I have down below in the chart, that doesn't matter, but the sort of what the world's all about and how much you perceive of it and versus, your confidence there. And the risk management section talked about loads of different things, and as well have been asked questions by people who have suffixed their question with this phrase about might be a stupid question, or they they might maybe they sort of preclude it with preclude it in a way with that, where one part of my answer to a question which says you know is this a stupid question is going to always include no, it's not a stupid question, and the stupidest part about the question is this just making me have to say that all the time, because there's no such thing as a stupid question. Okay. And what a lot of experts, that happens to them is, and you'll know this no matter where you are in your trading career, if you're working at an investment bank, you know that you've seen this happen around you in the office. And if you're just from a different industry entirely, you found success elsewhere in the world, and then you're entering into trading, for instance, you've seen this happen. And even if you're just straight out of school, you've seen this happen, all the time. People, there's this sort of concept of hubris as well, where people kind of do something, they form habits, and it becomes their norm and how they see the world, and then they pass that information on to somebody else, who then takes it as being sort of gospel, and then down the line, then that evolves into bad trading advice, or just inaccurate trading advice that goes on to sort of infect other people, and then maybe even make its way into a textbook one day as well. You never know. But a big problem with that kind of boils down to this idea of not only thinking that it's stupid to ask a question, but maybe having too much pride, or feeling shame about asking a question, or feeling or never feeling that imposter fraud thing, so never kind of questioning yourself, or indeed always feeling it so strongly despite your level of expertise that you would be that you feel like you don't want any cracks in your armory to show up, so that affect your confidence or whatever. And you know what? It's fine to ask questions at any time, no matter how seasoned you are as a trader. Just always bear that in mind. I do. I think everybody else out there should, and there isn't such a thing as a stupid question, no matter what it is. Even if you've been trading for 10 years and you turn around and you go, look, hey, excuse me, I know it might sound stupid, but would you explain to me what the RSI actually is? What is it? I've been using it, but what is it? Most people would be far too scared to say that, who've been trading in a room for however long. And it comes down to different ideas about what this concept is of it being a stupid question, whether it's pride or hubris or whatever. You've got your reputation to maintain, and ultimately that's just doing yourself damage, and can then lead on to sort of other things where you kind of look stupid. Now, I want to also caveat this as well with this chat here, that a lot of the things that I get wrong are mistakes that I made because I've not thought to ask a stupid question, and that's what's making me stupid and making me make a mistake, is because if I'd gone to somebody and said, can you explain this, or read it on the internet or whatever, I might have a better idea, just done the research or whatever. So just, a sort of a disclaimer here in that, of course, sometimes I make stupid mistakes. Last week I was making a stupid mistake on the charts because I had the ADX, the indicator down below that I used, the DMI, the directional movement index, is so like indicator. So I was using that with the wrong colors on the different lines. So I was saying a couple of things, turned out to be the case, of course, and it wasn't just based purely on those things alone that I was making these assertions. However, I have to admit I had the wrong colors in the line. Nobody asked me about it. I feel, looking back at the time, that it wasn't stupid. It was just a mistake that you make, kind of, I don't know, it was stupid, wasn't stupid. I don't have any sort of association, emotional connection with that word, because I know I'm not stupid. But anyway, I don't have any emotional connection with that word, so I'm able to talk about it like whatever. Maybe, yeah, was it stupid? Maybe it was a stupid mistake. I don't know. Maybe it wasn't a stupid mistake. Just human error, right? Whatever, who cares? But we all make them, okay? So That's right. Preferably ask questions if you are going to ask questions about things that I know about. Sometimes, if somebody asks me a question, I'll say I don't know because, like, of course, the smartest people in the world have always been willing to say they don't know about anything. So that's a good role model to have. Not don't take it from me. I'm not saying I'm the smartest person in the world by any stretch of the imagination. Don't be crazy. What I'm saying is that Einstein frequently said, "I don't know" when he was asked questions about things. There's no problem there. Also, sometimes I will have like what would maybe constitute an answer, but I'm not willing to give it because I don't want to spread misinformation. And that brings me nicely on to talking about gaps. Now, just before we go on, be inquisitive. Don't believe in magic or seek out the Holy Grail. There isn't one. Don't really even seek out answers to the questions. That's also kind of the wrong idea. Rather, seek to better understand the question. Okay, I think if you can do that, then you're on a winner, right? You'll never really get to the end of it, but you're winning the whole way along the way. Seeking the answers to the questions themselves, well, that's whilst there is an end destination in mind with that, you're not onto a winner performing that way. So, right, let's get on to it. So why do I talk about all this? Well, it comes up because of this chap here, Alessio Rastani. I'm not going to go into talking about whether they're good or bad. I think anybody in the industry is doing a great thing at all, spreading awareness and knowledge about things. It's great. He put this video out less than 24 hours ago. It's got more than 30,000 views on it. Now, again, I'm not going to even look at the video in much detail here because I don't want to have any sort of copyright thing come against me or whatever, so I'm not going to do that. I don't know the rules. If someone can explain it to me in the comments down below, that'd be good to know. It's one of these things that I'm ignorant about. Again, ignorance isn't stupidity. Those are different things. But anyway, in this thing here, you can see the pictures he uses as well. And his sort of his way he wears a suit there. I've seen him do videos inside a car, which is an expensive car. I've seen him, there's the way that he talks and everything else. Now, he comes across as an authority, right? Whereas I'm sat here, in this sort of in my abode. I've not shaved. I've got long hair, and I'm not putting anything on you about authority or any of that sort of stuff. And I'm saying to you, it's okay to say I don't know. Now, it's up to you who you trust more of all of that. All I can say is that I trust myself, and that's my main core skill as a trader, is to rely on myself, and I give that lesson to people all the time. Anyway, in this video, he talks about what you need in capital letters to know about these gaps on the charts, and he says a few things in there. Now, I'm going to kind of have to load it up. Hopefully, let me put the volume off and talk about certain things. Now, if I can just pause it and skip, or will he talk about something right here? Yeah, look, this bit here. He's drawing in this gap, and he's showing that there's a gap on the chart here, and he's using the wick, okay, and he's saying that the gap is between this body and this body over here, and that's what he's talking about. Now, incidentally, on this chart there is a tiny bit of a gap here right between the wick and the body here, but most people would actually consider the wick to be part of the sort of the candle of the previous day, part of the overall price action that happened there. And then they talk about gaps. They talk about where there has been no price action, and it actually is a clear, distinct space on the chart, as opposed to some space which is filled up with a line where there has been price action, where people have been buying and selling. Okay, whereas he's going on about this in quite detail. Now, he says at one point in this video, I just kind of didn't watch it in great detail. Kind of watched it like this. Gaps down have a higher probability of filling than gaps up. He really expresses this quite clearly. I think if you look at things in the long term, again, more examples of them, including wicks, or discounting wicks in terms of the gap. And as well, there's examples in this video where gaps got filled immediately, almost with wicks, and he then looks to later price action to say that it got filled whenever there's a body there and stuff like that. So there's various different ways of agreeing or disagreeing with this. Now, seeing versus thinking, you can see his video. I encourage people watching any video, no matter who they are, to do it and to think at the same time. And that's what I encourage you to do watching my videos too. Okay, so this is going to be a longer one, and I'm going to talk about this in a bit more detail, and I'm going to use a couple of things to reference it as well. Again, I don't care if you believe me as a person or whatever, if you judge me because I'm not wearing a shirt today. I was wearing a shirt yesterday, by the way, but I'm not wearing one today. I don't care. And whereas somebody else, like him in his video, talks about like the length of his hair having been shorter back or longer back then than it is now, as if we're opposite people, Alessio and I, of course. Whatever. I actually have got a great deal of respect for everybody in the industry, like I say, and it isn't about whether you're right or you're wrong. It's about being willing to be wrong in all aspects of things. Even this video right here, I could get a million comments saying, you know what, Rocky, it actually turns out everything that you said was utter pish. Alessio is the man, you're completely wrong. I'm okay with that. That's fine. I'm going to use this book here. Okay, look, it's got 3 stars out of 5. Why has it got 3 out of 5? Let's go down and read a few reviews. It's really a trading technique like a pudding. Oh, okay. The reader will find a cookie cutter approach of trading. A treat will not find a cookie cutter approach trading technique. Okay, different reviews here. It was a short book with lots of gap detail information, personal analysis of gaps. I found that gaps down. Blah, who cares? This person, good background explanation, a lot of detailed descriptive thingy. The problem here, some of it's a bit redundant, a bit it repeats itself from time to time, like I've done so far, I suppose, when I was talking, trying to sort of really softly, gently say, don't be afraid to say any question, it's not stupid. I could have done that in 10 seconds. We'll be looking at that book here. You can get it on the Google Books because you just have to search for finding gaps on charts trading wicks. For instance, we'll come up with this book, right? Okay. And we'll also use Bulkowski and his website here. Cheers, Thomas, once again for your fantastic website there. So, and we'll just run through a couple of things real quick and just explain what gaps are, because you know what? Alessio's video got 30,000 views within the first 21 hours. There's only going to be a few people viewing this, and I really genuinely care about you doing things correctly, and or just knowing that the ideas and having a different perspective, right? Whatever. Imagine 30,000 views on this video. Imagine it. Can you imagine it? Maybe sometime, but people don't look for accuracy in the videos and stuff. They judge things on different stuff. That's cool. I don't care. We're going to make it to 1,000 subscribers in like the next wee while, and it's going to be a super party. And mutual love to all of you out there. As I think a cringe police. Yeah, cringe police outside. They're coming to arrest me next. Okay, so yeah, let's go over to the price gap. I hope you could hear the siren. No, start on the book, right? Okay, let's start on the book. Now, of course, since the book's so repetitive, the handy thing about it is that you don't need to read the whole thing, right? So closing the gap. Where did I start off on this book? I had like some things to say about it. Did we not get like page 1 or 2? I thought I had. Yeah. Here we go. Right. Sweet. So gaps. Now gaps are going to come. Acknowledgements. Screw acknowledgements. Oh, right. Cool. Good name there with that Richard name. About the author. Skip your authors. Gaps. Right. What are gaps? Okay. Everybody, including Alessio. Right. By the way, no offense if you end up watching this video. I think you're a great guy. Really, you put a lot of effort into. You put a lot of work in. It's really great. Here's something which, with the greatest respect, I have a different opinion about how it works, and my opinion is based on things like these people think as well. This is what works for me. If what works for you, that's great, cool, okay. Anyway, let's just discuss this and see, and let the people decide make up their own minds. It's all good, right? Gaps have attracted attention market, blah, blah. You've maybe read that on the screen already since it's been up there. But there's gaps. Okay, they exist, right? What are gaps? Gaps are things that exist. You can see them on the chart. We'll see it in a second. Gaps. Okay, they're on the charts. Here's a couple of gaps. Look, there's space where the gap is, right? And then persistence of gaps, types of gaps, breakaway gaps, lots of different types of gaps. In fact, if you want to read this information, like the review says about the book, it's all there. It's on the internet. You can get this, look at it. You can buy the ebook for $10 if you want, no problemo. You need to have it, or you can just read this information. It tells you all there. Notes on the terminology, looking at daily charts mostly. Hey, that's not unusual for this channel. And we look at things like how the gap, because we look at the we refer to the day gap as day zero because we do not know until the close of the trading day whether we simply have an opening gap or if we have a gap that remains unfilled. Okay. That's not talking about the bodies or the closes in terms of but hey, we could debate this if you want, Alessio, about what they mean by that. But I think we can get some clarification when we skip down to the next sort of section here in the book. Where does it say it? Because I'm looking for a specific word here. Let me just do this. Just wick, right? Wick. Where's wick? Can you give me a find thing, Google? No. Will it do it? Will it do it here? Wick. Shit. I have to read this. Not there we go. There's our answer. Oh, thank goodness. Well, it loaded up perfect for us. The criterion used throughout this book to define a gap is that one day's price action lies totally. Was I already reading this bit and read it? No, cool. We're good here. We're good. The criterion used throughout this book is to define a gap is that one day's price action lies totally out of the range of the previous day's price action. Thus, for an up gap, the day zero low must be higher than the day minus one high. So, of course, what they were talking about earlier on was these technical type things, and that's easy to see why misunderstanding can happen when things get a bit technical. I understand, we all make mistakes. But for a down gap, the day zero must be higher than the low, the day blah 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 blah. Right? In candlestick terms, the candles cannot overlap, not even the wicks of the candles. This chapter considers the closing of gaps. Blah blah blah. Right? Now, okay. Basically, wicks close gaps. Right? Over here, there's Bulkowski's thing. Let's just do close. Look for close. He talks about closing the gap, but he doesn't talk about the close of trading. Let's look for open. He talks about the opening of the gap. He doesn't say the word opening of trading. Let's see wick. Doesn't really talk about wicks either. He's quite sort of binary about this. They're either open or they closed. And you can see gap, 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 closed gap. There you go. There was a gap here. It's being closed. Whatever, right? Percentage of upward gaps closing within a week. Area gaps, 88%, 1%, 8%, 58%. Okay, so we can see 88, 1, 8, and 58 are the statistical, the probabilities that he's looked at from having studied loads of them, right? He's looked at lots himself and whatever, and he's an authority on this, let's just say. And then the percentage of downward gaps, remember from Alessio's video, the big page that came up red, saying that downward gaps are less likely to be closed. Well, let's look at the numbers, 92, 1, 14, 67. Quick reminder, upward gaps, 81, 1, 8, 58. And this is talking about closing them within a week. And if you're talking about ever, right? Now, of course, there could be a gap on the charts from 1930, which will remain on the charts for the all time because the prices may never go back as low as that. And we can say, okay, fair enough. There might be a price on Bitcoin somewhere down there between $1 and $5 or something like that. Who cares? We're never going to go back down to $1 again. You might say, right? You might also say, we're going to zero, baby. Let's short this Ponzi. You might say that. Right. So, but there is the concept that if, in general, with things like inflation and the markets using a fiat basis for their pricing, and inflation, generally speaking, being a healthy aspect of economies whenever they're based in when they're in capitalist societies and they're looking for growth, so long as it remains below the sort of 4 or 5% area, then you're doing well because it encourages spending and growth of the economy. Will obviously have an overall increase in the sort of the general capitalist sort of outlook on that from maybe say like a Keynesian perspective, is that over time you'll increase the wealth in the society in the face of that inflation, and that as a result just generally speaking with that wealth increase, the stock markets will move up in the longer terms, which could be your core principle for saying why in general, if you look at stock markets over the last 100 years, they've gone up in general, right? And on that basis, you can have events which may then never get filled. Whereas a chart which has a gap on it to the upside, unless that gap then still remains on the chart, having been gapped past the gap, created because obviously the price goes down to create the gap, which is the up gap, right? Then the price then has to gap past the gap again to leave it on the charts, which would then in effect create a downward gap, right, on the charts by not having filled the previous upward gap, meaning that this is it's a Boolean problem, which is a stupid thing to get focused on. And indeed, right, ipso facto, downside gaps are in some ways less likely to be filled than upside gaps, but only if you consider an upside gap gapping past a downside gap gapping past an upside gap is right. You get the point, right? You get the point. Just don't make me explain that anymore. I know it's a fairly esoteric and complicated subject, and I hope what I've done is broken that down for you in a way that really lets you understand something which people struggle to explain, okay? And there now you have it all explained out for you. Generally speaking, by the way, gaps to get filled within a week or whatever, you can say, for instance, just area gaps. Not looking at particular necessarily things of happening in particular, but exhaustion gaps towards the ups, gap where the price gaps up, and then it's more likely to get filled in a sense, than not filled. Than not filled, not than the alternative. Just 58%. It's more likely to get filled than not filled. And likewise with exhaustion gaps, for instance, on downside of gaps down, whatever, that you're more likely to be filled than not filled. Then why am I talking about this again? Just wanted to explain what an exhaustion gap. Oh, whatever, I don't even care, right? Just, right, there's this page out there, you can go and look at it yourself. I'll stick the link in the description, shall I? We've also talked about lots of things, and we talked about Alessio's video, 30,000 views. Do you want me to link to that in the description? Maybe I will. You can go ahead and watch that. You can see, what's going on in the world. You can explain it to each other. Remember, a friend of yours is a friend of ours. Share this video with a friend. It might help them when they're thinking about trading. It might help explain what gaps are a bit to them. To that next level, making us, I suppose, assuming that you'd kind of know what a gap is in the first place, or whatever. So yeah, all of that. Anyway, right? Enough. Say this gaps. Be inquisitive. Don't believe in magic or seek out the Holy Grail. Don't do that. Okay. Don't really even seek out answers to the question. Okay. Rather seek to better understand the question in general. That'll serve you really well. I'm not going to talk about settings and oscillators actually today because it's too much, and maybe I'll never do that because I don't know if I can be bothered. I've made myself bored now. Don't believe the hype. Don't believe the hype. Chuck, don't believe the hype. Don't believe the hype. What? Public Enemy, they're a good band, so to speak, or they were before before I told Chuck to go fuck himself. Sorry, excuse me, excuse my language. Right, looking at the chart, the technical analysis again. Thank you so much for sticking through. I know that's been a long video, right? But I think it needed to be said. I think some people will benefit. I know that the video will only get max 50 views. Likelihood is it'll get 25 views, or whatever. And that I've been speaking directly to you. But then again, when I say this sort of thing, that I mean it. We're friends here together. I think this might have been somewhat useful video, at least in explaining some things. If I've done a bad job, let me know in the comments down below, because sure, I've had plenty of people tell me in the past that when I'm explaining things, I mess up. So back to our language here. Prices drop down to the purple supporty line. This is this horizontal line here, going along here. Let's just go on down to the 4-hour time frame actually and take a look at how this kind of panned out. In fact, no, in terms of looking at this here, just before we look at this and kind of ask questions about the oscillators and whatnot and do that sort of bit of analysis in here, as you can see, downward trend. Let's just jump over to the Ethereum chart, where I think an image says 1,000 words, especially a couple of images that got words next to them. This image here says 1,002 words. This image here says 1,001, 2, 3, 4, 5, 6, 7, 8, 1,008 words with these two images. That's efficient, is it not? Right, let's look here. We had the Hey Pal line. We came down, we touched it, we went back up again, we came back down again. On the way, the most crucial area along the way towards the Hey Pal line was, of course, the 230 zone that we talked about there. And this guy came in with laser beams on his eyes, and he melted that so that it's actually just zoomed right through that price and on down the way and into this zone that we were calling the hey, are we faking it or breaking out zone? Is this vegan cheese on our pizza? I prefer vegan cheese, but is this vegan cheese on our pizza, or or is this full fat cheddar, or no, mozzarella, full fat mozzarella on here? And that was what we were looking at there. So I think those images say 1,000 words in terms of how the price action went around this area. Going over to the Bitstamp chart though, you can also see that where it came in at here just happens to be where we have our downward sloping trend line, which is a big old fella there on the charts. And if we go up to the weekly chart here and look at it, you can see that this comes in here quite nicely along the tops of this weekly trend line, going back down to the 24-hour timeline, looking in here, sorry, the 4-hour timeline, and bearing in mind that this downward sloping white line there is our weekly sloping trend line, which we broke up above in terms of the smaller time frames, but haven't actually managed to really achieve much above here in terms of proper solid, definitely not going to touch it again type price action on the weekly time frame, although we are kind of currently above it, just in the position that it is in there now. That's kind of handy, so that's what we happened on here. And you can see though, if we drop down below the 50 simple moving average, we could be on the way down towards things like the 144 here, breaking down past these key areas of the 9,000 area. Really would be could potentially lead towards that happening. There's other things we can look to as well, like over here on the CME chart, where we indeed saw the prices come most of the way down towards the bottom end of this symmetrical triangle. As we know on the channel, we draw these things in And we talk about the subjective nature of them and how they can be drawn in different ways, and gestalt things and psychology behind all of this and whatever else. And we don't particularly care about the specifics of the thing. We just know that we came right on the way down. Now, what did we do though, which might be quite interesting to some people, because we've been talking about it for so long, so long. It makes me wet myself. How long? No, it doesn't. We've been talking about it. Just, we put a line on the chart here and said, hey, there's a gap on the chart here, talking about gaps and how they can get filled, and what's happened is it's been filled here at 8 930. And we spoke about that the other day about how the two areas for the prices to be operating between are going to be that 8 950 and the 9 850 zone, where you've got that sort of $1,000 type range on there. Let's just say 8,900 9,900. And as well, could we come down here and potentially fill this gap in at some point, even though the prices were up here really high, going up to the 10,000 area. And we had things like on the 24-hour time frame a golden cross. Do you think we could have done that? And in part of the volatility is during this period, and could we still even see the prices go on down? Yes, we could. But are we going to need to be greedy about things? No, we're not, because we've traded and we've had taken in full advantage. Peter asked me the other day, did you take full advantage of that move and the prices went up above there during the time that we were talking about volatility? And to answer Peter, I says, well, I think I did, but only time will tell if I took full advantage of it. And still it remains the case. Only time will tell if I made full advantage of it. I personally think it's completely, it goes completely against my ethics to tell people my positions and stuff like that, and to tell people signals and stuff like that. It goes completely against it. I actually tell people, to become self-reliant. Like I said earlier, it's one of the core, my most the thing that I give people a lesson about so often is about being self-reliant and trusting oneself as a trader, yada, yada, yada. So I don't give people those things, but only time will tell. And of course, having made it down to a target, which was like $1,000 away from where we started the price action, I think regardless of where it goes now, even if it drops on down or goes on up, that to have taken some profit in around that level was indeed taking full advantage of the move. That was it then at that point. So cheers for asking, Peter. Of course, I wasn't a fool. I took some profit along the way anyway, and then lo and behold, time worked for us. And that's why you should subscribe to the channels and be a Rocky Outcrop yourself. Learn these things, do these things yourself. And yeah, so what are we looking at then as well? We had more to talk about than just that. We came up, we went right into the goldy pockety area. So it wasn't all just what we were talking about in terms of the hourly gap, but we've often referenced all the different things that make these things tie together on the show, as we do in every episode. And of course, we came right down to this golden pockety area. Now we know that this was drawn in, using, what was it? Now I say we know, but do we know? Yeah, it was using the wicks here, whatever. We could have drawn it in body to body. We talked about how this was at the time as we were drawing it in. I've left it on here wick to wick, but of course, essentially we've done the same thing either way around. Doesn't matter. I'm not going to fight you about it. I don't care. You can say it was right or it's wrong. Honestly, I think I've said enough times in this episode that I don't care about whether I'm right or wrong. We've done that though. Anyway, cool. Then what happened is afterwards we came right back up to the fiddy simple, and actually, on beyond and into the shape of the wedge overall. But would it have been fair to thought at that point, could we come back up here for a retest of this zone? Yes, indeed. And well, we're above it just now, living under these golden cross conditions. Like I say though, over here we've not actually tested the 50 simple here, but we did go down and test the 55 EMA. Is that going to satisfy you along with that gap fill? Maybe, maybe not. Maybe we'll see this continue on the way for a while longer, because there's still plenty of time left in it, yada, yada, yada. You might also want to know that overall, in terms of the price action that we have just now, we've not done it. I was hoping for the episode to just to tie together with how Alessio and everything else with the episode. This is your wick here. This is your wick, and there's an hourly gap here. I got this pointed out to me by TradeSpotting. Shout out to him. He's got a great channel. Great guy as well, all that stuff. Where's the wee box guy? Give me the box guy, you bastard. Excuse my language. Looking here and drawing this in. This is your gap here in the charts, right? That's remaining. Okay. Beforehand, it was down to where did the hourly start at? That where did what? Why am I being so thick? Here, this is what the gap was like. It opened up with a gap like that on the early chart in the CMEs. Then it was like, well, these types of gaps didn't get filled so quickly. Looked like it was going right up to fill it. This is last night, around about midnight time, universal time. Came up here, looked like it was going to fill it, didn't actually fill it. Came back down, came up here, looked like it's going to fill it. What? Didn't quite fill it, and the gap is still remains. There's still a tiny little gap here on the early chart there. There's a laugh. Let's stick a horizontal ray in there for us. Anyway, now, okay, so is there a chance in hell? Is there a snowflake's chance in hell at all, possibly ever, that this gap will get filled? Yes, there is a chance in that. When could it happen? At any time. Overall, it could stick on the charts for ages. Look how long this hourly chart gap stayed on there. This is just as an example, as a crap example, perhaps, depending on your perspective on things. I don't care. But here it is. It stayed in the charts there for 297 bars, and we know that there's 24 hours in a day, so that makes it like 12 days that was on the charts for, So the guts of 2 weeks. Great, groovy. Okay, so we know that can happen. But do I suspect it'll get filled before that? Yeah, of course. Like, what are we talking here anyway in terms of this? It only has to go up another $50. Could it happen? Sure, it could happen. What else is there to talk about? I feel like I've covered an awful lot, but I know that big chunk in the middle there was evergreen. By the way, this is partly as a shout out. This long video today. Here comes the stupid shout out police. Sorry. Got to stop using that word and saying it so much. They're on their way to arrest me as well, along with the cringe police and earlier on the sexy police. So yeah. To fix. By the way, you said in yesterday's video that the spice, you find it keeps things spicy or whatever, having long and short videos. I actually, will go back to another 5-minute video, I reckon, tomorrow, and actually going to keep the time of the videos down quite a bit. I'm also considering sticking all the videos into one as well, like we've talked about in the past. Probably keep them separate though. All that sort of stuff. But today, this is in honor of yourself. Yesterday, you said that I put out a very short episode yesterday in thanks of the 800 subscribers to let you have a Sunday Bloody Sunday. And here's a long one, and let's go back to the charts. What was I going to look at again? Oh yeah, I think I was going to look at 4 hour the 4 hour. This is what I wanted to look at. Yeah, look at this. So we've got a low here on the 4 hour time frame and a low here. This is lower than it is over here on the stochastics. In terms of the DMI, this is one of these things where on both the DM positive and negative, it looks to be divergent ever so slightly, possibly. Actually, no, not the DM positive, but the DM negative. One of the ways I personally look for divergence on this is when it's on a downslope, I look towards the negative and consider it to be an inverted thing. For lower lows, I'm looking for higher highs on the DM negative, right? Makes sense, does it not? Now, I'm totally willing to be told that that's completely wrong and I'm doing something stupid, but I've just done this for a long time and I've found some success with it. Just like how Alessio has found success with his chat about the trading and the charts, right? Just the same thing. Complete respect for the guy. He's found something that works for him. It's just that he's got 30,000 views on that video. He's got 500,000 subscribers or something crazy like that. And he gets, I don't need to go into detail. I think everybody knows. So what have we got here? A couple of things on the go, right? First off, if this high is going to be the lower high compared to this and us continue a downward trend on the RSI here, we've got hidden bullish divergence on the way, or hidden bearish divergence, continuation divergence for the downside, pointing that out right now given the position of the RSI on the 4 hour, and we have bullish divergence given that this low here was lower in price action but higher than the RSI over there, okay? And then the DMI, you can see this is lower than the DMI negative there despite having a lower low, okie dokie, and all that sort of good stuff, right? Great, so that's what we've got there on the spot prices. So do we think that gap could get filled? I think so, as in general. Will it have happened before I finish filming the episode? Maybe, I don't know. I'll finish it damn well soon. Finish it in the next minute, okay? We're going to finish it in the next minute. Am I on the chart I wanted to be on? Yeah, right, great. Pull yourself together. 4 hour here, right. Yep, divergent there. Same scenario. Could easily turn into hidden bearish divergence should we not get follow through on this. Actually, stochastics are bullishly divergent as well on this one. The DM negative, not so much. It seems to have got its lower low in terms of being a higher high on that one. Again, go ahead, give me the roasting. The roasting. that I gave Alessio there. Just be as fair about it as I've been about all of this, you know, and then I'll have respect for you. You know, if you've got self-awareness and stuff like that, then it means an awful lot to me. And I just certainly don't mean to be condescending or a dickhead. I just know it comes across like that sometimes, and I apologize for that in advance. So, you know, there we go. Like, subscribe, smash the like button, all that shit. Sorry, I've sworn far too much, but you know, what am I on here? I'm looking for a gap on the hourly chart on the CME on the thingy whilst talking rubbish. That's a clear signal to me I need to tune out. Go back up to the 24-hour time frame. Let's see. Came back up to 50 simple. Yeah, let's just keep our eye out for retests of this line here. See if it goes down below it and above it. Where are we at the minute in terms of this thing? We're kind of effectively doing a retest of it. Are we not? No, we're not. We're just still above it. We've kind of, you know, are we breaking back into it or not? You choose whatever words you want to talk about with that one. Let's just see how it responds around that line. And where would a lower low be? Let's wrap up by then saying if we finish the day below 9,200, let's just call it 9,250, we'll have a lower low on here, which will also be outside of this, and we can check in with the divergences here possibly and whatnot on different time frames as well as we go along. Still in this downward sloping falling wedge structure, as we're potentially could break out of the rising wedge structure, which means, you know, overall in the grand scheme of things, whilst these work conversely to each other, that if this was a reversal, this is the bit, you know, which I would normally put in after 7 said buy, because I like to put a bit of gold dust in at the end. If this were to be a breakout from this area and you were to take a measured move off the back of this thing and you were to be looking at it and say that you went for something like this, and then you brought it down to where the breakout could be, then you went down to here, then you said, okay, so they're normally between 75% or whatever. Then you said, okay, so where does that bring us in at? That would be the 1 here in terms of this retracement number here. Was that right though? I mean, what are we looking at here? Yeah, there's exactly the full retrace all the way back down to the lows over here of the 11th. Then you'd be looking at overall having put in potentially, especially if it was a wick and it came back up higher than here, which is the previous lower low, which is the real one compared to just here, which is at 8,700. Then you could be looking at having maintained a bullish stance here, having fulfilled the measured move off the back of the rising wedge here, whilst having been in a downward falling wedge here, which could come down to have a lower test here, rejected from the bearish control zone, move on up and go for the measured move off the back of this thing, which is not done obviously the same sort of a way necessarily, but you know, which could take us up then into testing the oversold zone and putting us right in a prime position there to be able to actually go on and make higher highs, having cleared out a lot of the market, changed over the open interest quite a lot, which is at like not all-time highs but massive highs at the minute compared to like previous, you know, open interest is big and all of that. And that's the gold dust. Smash the like button. I'll see you next time. Okay, actually no, you know, that's way too arrogant. That's not necessarily gold dust, but that's just basically what all of this would add up to in the bigger picture of things. You could look at this and also talk about this neckline type area and where the breakouts would be coming in at, which could go for a full measured move, which is also looking down to that 877 area. And if in the fullness of time that's what happens overall, we get a body close up there at the higher 8,000s, having done all of this, and then turn around from there, we would also be doing that in around the 786 and the 886, or potentially even the 100% retrace on this other one, which would come in at the 382 on the bigger scale Fibonacci, which is of course your sort of first target that you'd be looking to, breaking down below the 236 area, which is in the golden pocket zone there from before. So that's how it all ties together, everything. That's the complete deal. Don't need to do a video that lasts for more than 5 minutes tomorrow, do I? Don't think so. Kind of covered absolutely everything there, unless something significant changes, obviously. And so I can go back to doing that. So there you go. Keep things nice and spicy. I hope you enjoyed the episode today. It's definitely far too long. Definitely far too long, but I just did it because it got 30,000 views. He's got 500,000 subscribers, and the books don't talk about it the same way. It's not how I look at things, and you know, there's more ways of looking at this than just what comes up in a video. And the statistical chance within the first week of a downside gap being filled is actually slightly higher than an upside gap in general. It depends, and that's partly comes down to the fact that there's more often going to be exhaustion gaps than there are just pure area gaps, as you can see. Because of the basis of an exhaustion gap, which is a gap on the downside being more likely to be filled than a gap up on the upside, even though there's more often the chances of a gap being filled, which is just a plain old area gap, are higher, that it leans the statistics over towards that direction in terms of just looking at things in a week or 2 weeks or 3 weeks or 4 weeks, depending on what way you're looking at things. Catch you next time. Hit that button, those buttons, hit the buttons. See you next time.